South Africa has endorsed Swazi Chabalala as its nominee for the role of president of the African Development Bank. She held the position of senior vice president at the institution, but resigned after her endorsement to ensure that there aren't any potential conflicts of interest as she pursues her candidacy. The AFDB will meet in May in Abidjan, Ivory Coast, to vote for the new president. The regulator for the financial services sector imposed about 943 million rand in administrative penalties during the 2023-2024 financial year. The fines were imposed on 31 individuals and represents a significant increase on the previous year's figures. That's largely due to a 475 million rand penalty, which was issued against the late former CEO of Steinhoff, Marcus Juster, for, among other things, publishing misleading financials. The Financial Services Conduct Authority says the increase from the prior period also shows the strengthening of the body's oversight mechanisms to detect and address misconduct promptly. Reserve Bank Governor Lesetja Kganyago has urged South Africa to move further away from cash. Speaking at the 2024 Payments Conference, he admitted that cash is still king, but data shows that the reliance on physical rands and cents is weakening. That's as better payment alternatives come to the fore, and so Kganyago has urged citizens to try transacting digitally. He added that a strong reliance on cash is not optimal for society, and going digital provides safety and convenience. South Africa needs 2 years of 2% economic growth to get long-term value investors to pay attention. That's according to JP Morgan. The firm's senior equity strategist, David Assekoff, believes 2025 will be the first of those 2 years. May's election outcome and the formation of the Government of National Unity have made the country the darling of emerging markets in recent months, so much so that the MCSI index of SA equities has risen 23%, outperforming the emerging markets index by 13%. On that note, government and business have renewed their working partnership and are targeting 3% growth by 2025. Business Unity SA Chair Adrian Gore says that can be achieved through changing sentiment. He added that economic growth would also benefit from adding 4 megawatts of electricity to the grid, and if South Africa could be removed from the Financial Action Task Force's grey list. Old Mutual will stay in Zimbabwe. The financial services group believes the fundamentals of that business are sound despite macroeconomic headwinds. Hyperinflation in the southern African nation has weighed heavily, and the firm has struggled to extract money from the territory as well. But CEO Ian Williamson says he is confident about the prospects of the company's Zimbabwe business. This comes as Old Mutual recently undertook a portfolio review and based on that exited Nigeria and Tanzania. Airports company South Africa has announced multiple new airline routes and additional flights to several of its airports ahead of the busy holiday season. That's as the firm looks to strengthen its competitiveness and attract more passengers. Among the developments is an agreement between AXA and British Airways to begin increasing the number of flights between Cape Town International Airport and Heathrow from the 1st of November. Further afield, Nike has removed its yearly revenue forecast just as a new CEO is set to take the helm at the sportswear giant that is staring at a holiday season likely to be filled with discounts and weak traffic on its website and mobile apps. Let's take a look.
Nike withdrew its annual revenue forecast. The sportswear giant also now stares at a holiday season likely to be filled with discounts and weak traffic on its website and mobile apps. Nike also postponed an investor day due for November 19th. Investors were spooked and shares went tumbling 6% in aftermarket trading. The stock was up and down earlier in the day after the company posted disappointing quarterly sales growth but beat Wall Street estimates on profit. The firm said traffic declines across its Nike-owned stores and websites were deeper than anticipated and led to an inventory backlog. The company added sales fell despite higher promotions at stores owned by its wholesale and retail partners. Nike's growth has stalled recently, in part due to on-trend rivals like On and Hoka. It's a tough environment for its new CEO to enter. Last month, the company said it would bring back company veteran Elliot Hill to fix things and take over from John Donahoe as boss. Nike's stock has fallen 18% so far this year, though it regained a tenth after the announcement of Hill's return. Withdrawing the outlook gives Hill flexibility to assess Nike's strategies and business trends. The firm said it allows him to develop plans to best position the business for fiscal 2026 and beyond. Nike had earlier forecast an annual revenue decline in the mid-single digits. The company did offer an outlook for its September-November quarter and forecast a drop in sales between 8 and 10%, higher than expected.